Despite recent gold fluctuations, why is one of the world's most renowned investors not only holding on to his reserves, but actively increasing them? If you're a gold holder or thinking about acquiring gold, stay tuned till the end when we delve deeper into what this could mean for gold's future. Savvy investors may have noticed, despite some fluctuations, gold's remarkable resilience since February. What's driving this sustained performance? Experts point to growing concerns about America's skyrocketing national debt and declining fiscal health. Over the last 8 weeks, despite interest rates expected to remain at 23-year highs and a decrease in Middle East tensions, gold still has climbed 15%, rising and staying within $2,300 per ounce. It's great to see gold perform, but when gold is performing under economic headwinds, that means the stability of the economy is in question, and that could be a bigger problem for all of us. The 2020 deficit reached $3.1 trillion, an all-time record. The deficit the following year wasn't much better, hitting $2.7 trillion. And despite there being no crisis on the nation's radar screen, currently the Congressional Budget Office projects the annual deficit will average roughly $2 trillion a year over the next decade. The CBO additionally forecast the national debt currently closing in on $35 trillion to rise another 60% in just the next 10 years, topping $54 trillion. We're all concerned about where the national debt is heading in 10 years. But what's more alarming is what's happening right now. According to recent analysis by Bank of America, the nation's national debt is now growing at the stunning rate of $1 trillion roughly every 100 days. We tend to ignore these big numbers because it's hard to comprehend spending $1 trillion almost every 100 days. But that's the reality we're living in, and the fiscal instability appears to be getting worse. It is clear that some investors are using gold in hope of fighting instability as world gold demand rises in Q1, despite record high prices. The same Bank of America analyst who reported on the scary pace America's debt is rising is now suggesting that debt may be one of the drivers of gold's price surge. When gold was $2,077 per ounce, Michael Hartnett, chief investment strategist at Bank of America, said, "Little wonder debt debasement trades are closing in on all-time highs. Since then, gold has climbed $250 per ounce." Strategist after strategist also see the accelerated growth of U.S. debt as a price driver for gold. Concerns about the U.S. debt cycle, devaluation of money, and fiat money in particular, does drive the story and the narrative, said Brad Bechtel, global head of foreign exchange at Jefferies, who added, "Concerns about the debasing of fiat money is generally one of the drivers of the gold bugs." One savvy investor who is turning into a gold bug to hedge against fiscal instability is none other than Ray Dalio, founder of Bridgewater Associates, the world's largest hedge fund. Dalio has a personal fortune estimated to be in excess of $15 billion. He connected the dots from national fiscal uncertainty to ownership of gold. When the financial system is working well, which is when there aren't debt and inflation crises, debt assets and other financial assets are good assets to hold. On the other hand, when the reverse is the case, gold is a good asset to own. That's the main reason that gold is a good diversifier and why I have some in my portfolio. Many of our customers are concerned about the daily fluctuations in the price of gold and silver. To be clear, focusing on the day-to-day valuations is like worrying about the market value of your home when you have no plans to sell. Renowned investors like Ray Dalio see beyond the daily price changes and are focused on the long-term challenges we face. When you think about inflation, our national debt, and the geopolitical risks we face, where do you think the economy will end up in 3 to 5 years? and does holding and buying gold and silver make sense?